So many people think you need 20% down to buy a home, but that's simply just not true. In this video, I'm going to explain how you can buy a home for as little as $1,000 out of pocket and show you how homeownership might be closer than you think. So I'm a licensed mortgage broker and real estate agent in Colorado, and I've helped hundreds of my clients get into a home for as little as $1,000 down. In this video, I'm going to explain to you how you're a lot closer to homeownership than what you think. I'll explain the pros and cons of this program and who qualifies for it, and then you can decide whether it's a program you should use or not to get into your first home. So in this video, I'm going to be talking about a program called CHFA. CHFA is a Colorado down payment assistance program designed to help buyers get into homes who haven't saved a ton of money for their down payment. This is not specific to first-time home buyers. So almost everybody calls this a first-time home buyer program. Even a lot of us in the industry are guilty of calling it that, but it can be your third, fifth home. It really doesn't matter. We get a lot of people who are recently divorced or for whatever reasons have sold a home. They don't have a lot of money in the bank and need to buy another home. Again, it could be your first home, your eighth home. It really doesn't matter. There are some parameters that help you qualify for this program and some that also exclude you from this program. We'll go over later in the video, but it is not limited to first-time home buyers. So what exactly does this money cover with the down payment assistance program? Well, obviously it covers down payment. It's in the title of it, but additionally, it allows for closing costs to be covered as well. And there was a recent rule change that allows for an interest rate buy down to be included as well. Previously, it had a set interest rate and it wouldn't allow the seller or anybody to buy down the rate, but this is a huge rule change in favor of the buyers. So what is the max allowable money that it will cover? Well, it caps at $25,000 or 3% of the loan, whichever is the lesser of both options. So it can go up to 25,000, but many people won't reach that cap just because they're not going to spend that much on their home that they need down payment assistance for. So 3% or 25,000, the lesser of each. So let's talk about who qualifies for this loan and the requirements involved in being able to take advantage of this program. So let's start with credit score. You must have a minimum FICO of 620, and they use your mid score. So they throw out your highest and your lowest credit score, and they use the mid one. It must be 620 or higher. However, I've seen many people start out with like a 600. And if you're close, there's a few tweaks we can help you do to get that credit up above the 620. It's usually fairly easy. If you're just needing to pay down a few of your cards, or there's some tweaks here and there to your credit to get it over that 620 hump. One of the other things is an income restriction. Now, I see most people qualify. It's dependent on area. The more expensive an area, the more forgiving they are on the income restriction. So most people I see apply for this loan do not meet that threshold that they have to worry about getting kicked out because of the income restriction. It's also dependent on the size of your household as well. This must be a primary residence. So one of the other requirements is this cannot be a vacation home or an investment property. You must intend on occupying this residence as your home. The other thing that this program requires is a quick online home education course. It's quick and painless. You can do it online from your home. I believe it usually takes under a couple of hours to do. And once you satisfy that, they'll give you a certificate. But the requirements of this program are fairly easy to meet. So what kind of home can you qualify for using this program? You can qualify for a single family home, you can qualify for a townhome, and you can qualify for certain condos. Condos must meet an FHA requirement to be lendable by FHA. That should be up to your lender and your real estate agent to be coordinating. Before I take a home buyer out to shop for a condo, I will always make sure that it is FHA approved so that we're not wasting time. It is easy to find online whether a condo association is approved or not. Townhomes and single family homes are almost always lendable for FHA, but condos, you get into a lot that are not. So it's important to vet those before you waste a lot of your time. So let's cover some of the downsides of this program as well. We've talked a ton about the positives, and I believe overall this program is great, but with every great thing, sometimes there's some negatives too. So let's cover those. One of the big things that this program does have is higher interest rates than a traditional loan without using the down payment assistance. Now, there are two options when using the down payment assistance program. One is a true grant where you never pay back the down payment assistance. In that case, if you take the free money, you're going to take a higher interest rate. But on the flip side, you never have to repay it. Your other option, if you want a better interest rate, is to take that down payment assistance as a silent second, which means you don't pay on it. It only becomes due when you refinance or when you sell the home. If you take that option, you're going to get a much better interest rate to offset the free money. And again, people talk about free money never being free, and that's true in this case too. If you do take the free money, just expect a higher interest rate, but there are options. Right now, this program is amazing, and we see a lot of people using it. One of the other downsides to this program is when the market heats back up, it is hard to get an offer accepted in a extremely bullish, hot market. Sellers traditionally want people that have large down payments that can come in and they know they're either going to pay cash or put a large amount down. So when you see a market that's insane, like during COVID, it was very hard to get these programs, this program accepted with an offer. Most sellers are snobby towards it. However, as I'm recording this in 2026, sellers are desperate to sell their homes. They are just happy that you're writing an offer. So the fact that you're using a down payment assistance program is pretty irrelevant to them. They're just happy. So again, if you're going to use this program, it is best to use it when not a lot of people are buying. Right now, this market is extremely in favor of the buyers, which makes this program even more powerful. At some point when the market flips again, this won't be as powerful of a program as it is currently. So overall, this program is extremely effective and helps a ton of buyers that don't have a lot of money down or choose not to use a lot of their money towards a home. I have a lot of people that even if they have the money set aside, they want that in case of emergency. They don't want to deploy all that money and put it into a house if they don't have to. This program is a great alternative for that and helps people get into homes that maybe have a good job, can pay their mortgage. They just lack or choose not to deploy a large amount of money to put in their home. This home program right now, again, is extremely effective as I'm recording this in the first half of 2026. If we maintain a buyer's market, it will continue to be effective. But at the point you're waiting for all the other buyers to essentially start buying, for you to feel like it's a good time to buy, that's when this program might become less effective. If you're on the fence or you have questions about whether you qualify for this program, feel free to reach out. I'd be happy to go over more of the pros and cons, see if you qualify for the program, and get you into home ownership. As always, feel free to reach out. Thank you.